I'm Maggie Freed. I am the head of the Ocean Seafood and Aquaculture Investor Consortium at CREO Syndicate. And just to give a brief background on that, CREO Syndicate is a nonprofit organization that is a network of investors, primarily single-family offices who are investing in areas related to combating climate change and promoting sustainability. I work with a dedicated subgroup of those investors who are all either actively investing in or have committed to investing in sustainable oceans, aquaculture, and seafood. And collectively, this group has a goal of deploying $250 million into these sectors by 2023. And one of the ways that I work with them is through sourcing and doing initial evaluation of deal flow, including land-based aquaculture.
So Maggie, I was particularly keen to get your perspective on this sector, especially. To date, what we've seen in the last few months, we've seen a lot of companies get financed in Scandinavia and the Oslo Stock Exchange. And that's been the main mechanism that a lot of these projects have been using to get project financing. Do you think that your constituency, North America, family offices, are interested in this space, and how do they perceive the risks inherent in land-based farming, aquafarming rather?
Yeah, so just a small correction, which is that CREO members are not just in North America, but are actually global, though we do have a large number of members in the Americas and Europe. So this represents thoughts from across those geographies. But what I will say is that when I started in this role 18 months ago, there was significant interest in land-based aquaculture. Whenever I would connect with these investors, it seemed like a topic that was top of mind. So much so that I pulled together a group discussion of our members so that they could share with one another what they were seeing in the sector, both their interests as well as their concerns. And over this time, I have seen a number of land-based opportunities, which I've shared out, and they've gotten various levels of traction from among our membership. But what I will say is over the past few months, it seems like there is less excitement around the space. Again, this is what I'm hearing from our membership. But on the other hand, I'm still sharing out the deals that I see and still getting some interest, though it does feel like perhaps that initial interest is not being taken into diligence as it was previously. So a few things on this, Matt, which you and I have discussed, and you mentioned in the presentation, which is there seems to be growing interest in other species besides salmon. The larger salmon projects require a lot of capital, which either are beyond the means of many family offices, or if they were to participate, their ownership is so diluted that they can't have a meaningful impact in ownership of the company if that's their strategy. And for many of them, it is. And so there's an interest in other species, other high value species. I've been seeing a lot of shrimp deals, as you mentioned, and so this seems to be gaining some interest and some traction. But broadly, there is still concern around many of the risks I'm sure we'll get into today, but in particular, looking at, again, really high CapEx costs, really high capital needs, and there's a strong desire to see the cost of production get lower and be closer to that of ocean-based production. And then the last thing I'll say on this is that I have seen a number of our members who might be interested in this space and want to be able to, in some ways, engage in it, capitalize on its success, and then take bets on it. But they're not doing it through investing in production. They're doing it through investing in ancillary technologies and companies that plan to partner with RAS companies, RAS production companies, but aren't actually doing the production themselves.
That's great, thanks. Do you think there'll be any other mechanisms that in which they could invest in the the live production assets? I mean, we've seen a lot of new investment trends recently. That the whole SPAC kind of craze, I guess, has emerged. Are there instruments where it would become more appealing?
I think SPAC's an interesting one. And I think we would want to see significant revenue before you're going to SPAC. And as your presentation just pointed out, there's a lot of companies that are in the earlier stages. And even companies that are already in production, their revenue is still limited. They're looking to scale. Again, there are a few who might be exceptions to that. So I don't know whether the logical route is to SPAC, but it does provide a significant amount of capital to companies. But I haven't seen from our membership an interest. There is a lot of interest broadly from CREO membership in SPACs, but not necessarily in the aquaculture space. With that being said, there might be other mechanisms, for example, project finance, which might diminish some of the risks than to someone who's just going in with equity. But I have to say, of the companies who pitch to me, I see pretty traditional financing structures.
So I just, once again, just a call for questions from the outside audience. We're still assembling those questions. I'm going to go back to Maggie, just to take a bit of a step back. And if you look at, I mean, your constituency look at oceans and aquaculture investments. How do they kind of look at the land-based segment versus other types of aquaculture investments?
Well, that's a great question. And on the production side, I think what makes land-based aquaculture particularly appealing to our members is the potential sustainability piece. And I don't want to say that the land-based aquaculture is inherently sustainable, because we know that it depends on your energy use and your water use and how you're actually producing. But when we look at many of the negative impacts on that net pen aquaculture has, when we see that coupled with declining wild fish stocks, when we see that coupled with demand, the increased demand for protein for seafood, if you're able to do land-based aquaculture sustainably, I feel like I'm preaching to the choir here, but it's a fantastic potential solution. Demand for protein, and so for investors who are sustainably minded, it's particularly appealing. And I think that's what was driving and does continue to drive this interest. I think perhaps as offshore aquaculture becomes a bit more feasible on the technology and the capital side, then there might be some competition there. But truly, for investors who are sustainably minded, that's where land-based aquaculture comes into play. And I think, again, going back to the ancillary technology or some of the input piece, there are opportunities for investors to invest in that broader ecosystem and continue to play a role in pushing land-based aquaculture operations to being more sustainable as we work on these particular pieces.
Thank you. Maggie, I'm going to come back to you. So from the perspective of institutional investors, which particular ESG screens or metrics are they most concerned with in their evaluation of RAS opportunities?
Yeah, so I can speak broadly to what the investors I work with might look at, or what I look at when doing an initial screen. But then when they get down into their own diligence, they all have specific metrics that they might look at. But at a high level, I would look at water usage. I would look at filtration and what's being done with effluent. I look at the energy source. And I look at the markets. I mean, I think that one of the major benefits of land-based is being close to major markets and being able to reduce the carbon footprint of the transportation. But if you're raising in the US and then shipping your product to Asia, that increases your carbon footprint and mitigates some of those sustainability claims. So I look at that as well. I look at feed, although I understand that this is an area where a lot of producers are looking to make some changes in the future to move away from wild caught based feed and fish meal and fish oil, but talk to them about their current plans and what they're thinking for the future, and then just broadly, having conversations about how they think about their supply chain and how they think about some of the sources of their inputs, either where they're at currently or plans if they're, for example, their energy source might not be the cleanest right now, but plans in the future to try and shift that. So those are a couple of the metrics I look at, but again, it'll depend investor by investor what they're looking at once they're really getting into that deeper diligence.
Right. Have you just curiously, this is my own question, but have you seen many projects with renewable energy combined? And I guess those would be quite attractive, right?
Yes. Not a lot, but I have seen one that is in the planning phase that does seek to combine renewable energy with production.
Maggie, I'm going to ask you a question about the US aquaculture. A year or two ago, there was a unanimous decision by both parties in the US to push forward the aquaculture bill to encourage investments. But however, we've seen some difficulties with companies getting licensing, and in Maine, there's one notable case. Do you think we're going to see more of that? I mean, considering that land-based is, as you say, is such a sustainable way of producing protein, what do you make of the kind of civil opposition, and how do you think that will evolve going forward?
Yeah. We do talk a fair amount about the regulatory process, and I think quite often when I have conversations, not only the regulatory process, but I think a key part of that social license comes into play as well, and that's certainly what you're talking about with what we're seeing with some of the litigation. I don't want to speak to any specific case, but certainly there are concerns from communities about the impact on their economic viability, on the impact of perhaps effluent discharge on their waterways and their livelihoods. And so from what I've seen, it seems like it's critical to be able to come in and demonstrate, any mitigation plans that are in place to be able to resolve some of these concerns. Certainly not saying that any companies or companies that are facing litigation are not doing that. I know in some communities it's an uphill battle, but I think there's a lot of interests at play here, and whether that's from the environmental NGO community, whether that is from the fishing community, who have their own interests. And so I think that land-based aquaculture will have to be able to continue to demonstrate publicly, what it can do economically for communities, what it can do, how it's able to raise fish sustainably and humanely in order to combat some of this negative sentiment that is shared out. And you have that, and then you also have things like Seaspiracy, and I believe that there's another film that's coming out now that's trying to push people away from seafood, but people away from seafood on a whole. So there's a lot to combat here, and so I think the land-based industry will just have to continue to be clear on its potential and what it can and is doing, and be transparent on that.
Good. Yeah. So the question is, most of these projects, when you look at the MPV model, you see a premium price that's baked into that MPV model. What do you make of that premium pricing? How do they, when they look at when they assess a project, how do they look at that aspect of the project criteria?
Yeah, I mean, I think that it really depends on the species that you're talking about. And I think it depends on, so often you would do a sensitivity analysis of looking at not only the premium pricing that the company's putting forward and saying that they can get, but also looking at if you were to get lower price and not be able to get the prices that they'd like, you know, what does that look like in terms of profitability and returns? And so certainly you'd want to make sure that even if you're not able to get this premium price, that you know that you're able to still get the return that you want. And so modeling that out is important, and also, you know, looking at and truly understanding what is the market size that has a willingness to pay at that size. And I saw a question come in about smaller, you know, more cottage projects that do sell at a higher price. And not to get ahead of you, Matt, but you know,
good.
there's lots of food companies that I see, whether it's, you know, RAS or whether it's a packaged good product that are selling at a really high price and they're having a lot of success. But it's a really small market. Maybe they're selling only to people in California right now who will pay more for sustainability, but in other parts of the country and other parts of the world, they're not going to get that. So being able to do that sensitivity analysis and make sure that you can still get the returns that you're looking for at those lower prices, in case that pricing doesn't really hold out when you expand the project, is really critical. But to give a specific price that they're looking for, you know, I can't do that because it really depends on the project, on the species, and so on, and also on the investor themselves and the return they're looking for.
A quick fire last question to everybody. Do you think there are any known unknowns or unknown unknowns out there that could change this debate in a year or 5 years? Maggie, anything that people are not talking about right now that could change this entire scenario for land-based?
Maggie's on mute.
I am on mute, but I guess I just bought myself another few seconds to think about that, because that's a tough question. But I think if offshore aquaculture becomes more competitive, I think that might shift some capital away from land-based to offshore aquaculture. So I'd want to keep an eye on, and I do keep an eye on those developments and the feasibility of it.